In this presentation, we will take a look at and put together financial statements related to an internal service fund. Recall, as we go into the internal service fund, we're talking about a proprietary type funds, the three types of funds being governmental type funds, proprietary type funds, fiduciary type funds, the governmental type funds being the largest category, the governmental type funds being on a modified accrual basis as opposed to a standard accrual basis. The internal service fund being a proprietary fund, one that runs more similar to a for-profit organization, one that typically has something similar to customers, and therefore on an accrual basis method. Internal service fund typically having the customers being somewhat internal to the government. So we're looking at an accrual type based financial statements as opposed to the modified accrual. They will be a little bit more familiar, a little bit more in line with what we would expect if we're used to for-profit type organizations. We have the trial balance on the left-hand side. The trial balance is going to be in order. We have the green accounts being the asset accounts, the liability accounts in orange, and then what would be the equity section in light blue if it were a for-profit type of organization. We're talking about the net position section here as we're talking about the internal service fund. The dark blue, what would be the income statement type accounts in a for-profit type of organization, those type of accounts that would close out to the equity section in a for-profit organization. Temporary accounts closing out to net position here. We're going to start off with the statement of revenues, expenses, and changes in fund net position, which in essence is of course going to be similar to the income statement. I'll often probably be referring to this as the income statement like account or the income statement like statement as opposed to the statement of revenues, expenses, and changes in fund net position because of course it's a little bit easier to say that. So just be aware that as we go through this, we're basically talking about the income statement type account similar to a for-profit type of organization. Formal name for the internal service fund being statement of revenues, expenses, and changes in fund net position. As we look at that name, we know that we're dealing with an accrual type of system as opposed to modified accrual because we have the term expenses as opposed to the term expenditures. So that's going to be one of the indications saying, okay, we're dealing with a fund here. Clearly, we have a fund. However, the fund we're dealing with isn't on a modified accrual, but on a normal accrual, given away by the fact that we have expenses as opposed to the term typically used under modified accrual, that being expenditures. So if we go through this, then we're concentrating on those dark blue areas, what would be the income statement in a for-profit type of organization type of accounts, the ones that would be below equity section if it was a for-profit type of account, the ones below the net position here. So we're going to start off with the billings to departments. So billings to departments, we have a credit in our trial balance. We're going to put it up here as, of course, a plus and minus 77,100. We're going to put it in the outer column because we don't have anything else that is in that category and therefore don't need a subcategory. Then we're going to go to the operating expenses. We're going to say operating expenses colon, and then we're going to indent the operating expenses that will go down below. We've got the wages expense. So we've got wages expense. That's going to be the 58,400. We're going to bring that into the inter column now because we're going to be adding them up and summing them up in the inner column. Then we're going to have the 4,010. That's going to be the payroll taxes. Then we'll just pull over the office expenses. Once again in the inner column, utilities expense as well. Then we have the cost of materials and supplies, and finally the depreciation. That's all the expenses. We found a home for all of the expense items. Therefore, we're going to put a little underline there and sum them up to the right-hand side, and that is going to be the 95,900. So now we're left with the outer column, 77,100 and the 95,900. If we subtract those two out, we get the operating loss in this case, with of course the expenses being greater than the revenue. So we have the loss of 18,800. And then we're going to basically tie this into the net position or to the balance sheet. So we basically have our income statement items. Now we're going to say, okay, how can we tie this in to the net position? And of course, this would be similar to if we had a post-closing trial balance. We note that these two accounts here represent the beginning balance, similar to what would be a retained earnings account or a capital account that would then be closed into by the net income account at the end of what would be the income statement. So these are typically going to be the beginning balances. And if we add those up, then we get the, let's add them up here. We get the 22,900 plus the 12,800. That's going to be the 35,700. So 35,700 beginning position. Then all these combined together, of course, add up to that credit or the negative number, the debit, the negative number of 18,800 or the loss. Subtracting those two out gets us to the ending balance, the 16,900. This then is what would be similar to the equity section, net position section, on what would be similar to the balance sheet statement. So we've basically tied back into basically the balance sheet kind of statement from the statement of revenues, expenses, and changes in fund net position, the income statement type of statement. Now let's take a look at the balance sheet type statement. That's going to be the statement of net position. So we got the statement of net position for the internal service fund. Again, I might refer to that as the balance sheet kind of statement, the type of statement that's similar to the balance sheet in a for-profit type of organization. And then we can go straight through as we would expect in a balance sheet type format, assets and then liabilities, then moving to the equity. So we've got the current assets. You'll note that we're going to be breaking out between current assets and long-term assets, property, plant, and equipment type of assets, because we are in an accrual basis as opposed to a modified accrual basis. So on the modified accrual basis, we wouldn't have any long-term. We would just have the current, therefore no need for the subcategories. Here, we're going to have the subcategories because we're going to have the current assets and the long-term assets. So we've got the current assets, and then we've got the cash. Starting off with the cash, we're going to pull that and indent it, pull that into the inner column. Then we have the due from other funds. So due from other funds, we're once again going to pull that into the inner column. Then we're going to have the materials and supplies inventory, once again pulled into the inner column. We'll sum those up and we'll bring that out into the outer column, total current assets. Then we're going to have the capital assets. This is similar to the property, plant, and equipment type of assets, and that's going to include the machinery and equipment and the accumulated depreciation. Now, of course, the accumulated depreciation is here on the trial balance as a credit. We're going to put it on the books as just basically saying less accumulated depreciation. If we subtract those two out, then the 52,600 minus the 36,700 gives us the 15,900. Then we're going to total up the total assets, that being the total current assets, the 7,350, and the total capital assets, 15,900, to give us the 23,250. And then we'll move on, of course, to the liabilities. Liabilities, now we have current and long-term in terms of liabilities as well, but they're all current. So what we're going to do is sum them up and then have the subcategory just simply say total current liabilities instead of basically breaking out current and long-term. So we've got accounts payable. That's going to be the 2,550. We have the due to the federal government, the 2,630, and the due to other funds, 1,170. We pulled those into the inner column. Now we're going to add them up in the outer column, that being the total current liabilities. Now we see that term, current liabilities. We don't have any long-term liabilities, so of course this will be the only total for the liabilities. That at 6,350. Then we take a look at the net position. This is where things kind of differ the most, of course, because this is where it would be equity or stockholders' equity for a corporation or owner's equity for a sole proprietorship here. Net position. So the net position, we're looking at the net position in the net investment in capital assets. That's going to be this account here. And then we have the net position in unrestricted. Now note that we took basically the 18,800, we closed it out to the net position account. So we closed it out here. We're breaking out the net position between net investment and capital assets and those that are net position unrestricted. Why would we do that? Note that the net position here represents assets minus liabilities. So the assets are at 23,250 minus liabilities 6,350. That's going to give us the 16,900. And so there's the 16,900. We want to basically break that out because that 16,900 represents the assets over the liabilities, which is what, if people were looking at this statement, would look at it and say, maybe I want to do something with that. Maybe I want to spend that money in some way or plan to spend that money in some way. And we got to say, well, now you can't spend the money, all of it in some way, because there's some of it that is applied to basically cash. Not cash. It's applied to long-term assets, including machinery and equipment. You can't spend that portion. So basically this amount, the 52,600 minus the 36,700, or the 15,900, represents in our case the long-term assets. So when we consider this 16,900 net position, assets over liabilities, and start thinking, how can we spend that in the future? We have to say, well, part of that is represented by machinery and equipment. Of course, we can't spend the machinery and equipment, so we're going to represent that, breaking it out, saying, hey, 15,900 can't really touch it. 1,000 then's all you're looking at in terms of something that you may more likely be able to plan for and do something with. Next, we have the statement of cash flows. Now, when we look at the statement of cash flows, we're going to look at a more of a direct method, and then we'll look at an indirect method. So we'll start off with the statement of cash flows from operating activities. We're going to start off with a more of a direct method here. We've got cash received from customers. Now, as we go through this, when we think about this, how the accounts that will be affected, we're going to go through this relatively quickly, but remember, on a direct method, we're going to say that we have basically the customer accounts here. So we've got the due from other, that's going to be the receivable account that's going to be involved with this calculation, and we would have the billings. That's what we would expect to be involved. In other words, on an accrual basis, or if this was a cash basis method, this billings would basically be cash from customers. And then, of course, since we're on an accrual basis method, the difference in the receivable is also, in this case, being the due from other funds, because it's an internal fund, so the internal service fund being something that will affect this amount as well when we're thinking about the cash basis versus the accrual basis. So we're going to involve these items. So what we're going to do is take the difference, which is the 5,400 ending balance, minus the beginning balance in what would be similar to the accounts receivable account, 4,050. Then we're going to take that and we're going to add it to, or I should say subtract it from, we're going to have a subtraction problem, minus the 77,100. And that's going to be the 75,750. So that's cash received from customers. Next, we're going to have cash paid to employees and taxes. So that would include then the accounts that would be affected would be the payroll taxes. So if we had any payroll taxes and the wages, and then we would have the due to the federal government, because that's going to be the difference in the taxes payable. So those are going to be the accounts we're going to use. Now, these two, of course, are the same. So the beginning and ending are the same. So all we need to do then is add up the 58.4 and the 40,410 to give us the 61,410. So there's the 61,410. Then we have the supplies. So then the supplies are going to include the materials and supplies inventory up top. Then we have the accounts payable is going to be related to the supplies. And then we're going to include the office supplies down below. And we are going to include the cost of materials and supplies. So these are going to be the accounts affected. So then we'll subtract these out. So we're going to say we have the 490 minus the 350. So that's going to give us the 140. Then we're going to do this in the other order just to flip the sign. So then we're going to say plus, and we have the 1700 accounts payable minus the 2550. So that's the beginning minus the ending. And then we're going to say plus the 3700 plus the 8180. And that's going to be the 11,170. So there's the 11,170. Then we have the other departments. And the other departments is going to include the due to others. So we got the to others, and we've got the 14,610 in the utilities expense, because the utilities expense is the other department that is a governmental department, utilities. And that's going to give us the 14,610. Then if we were to add these up, we get the 88,190. So that's total cash paid to. And then we have net cash provided by operations, which would be the cash received from customers minus the 88,190. And then we have the net decrease in cash and cash equivalents. And that's going to be the same, 12,440. We have cash and cash equivalents at the beginning. So that's going to be the beginning balance here. And of course, that's going to get us to cash and cash equivalents at the ending, our ending balance being the 1,460. Now we'll do the reconciliation of operating income to net cash provided by operations. So in essence, we're going to now do the indirect method as opposed to the direct method. So now we have the operating income is going to be the 18,800. That's going to be this item, or the amount that was on what would be similar to the income statement. Then we have the adjustments to that. the depreciation, which we can consider the depreciation as either taking it from here, the depreciation, or we could think of it as the difference, of course, in the accumulated depreciation up top because we didn't sell any equipment. So that's going to be the difference or the change, which is this 7,000 here. So the 36,700 minus the 29,700, the 7,000 is going to be that item. Then we have the increase in inventory. So inventory increase. So we're going to go to the inventory here. Ending minus the beginning, we've got a 140 increase in inventory. It's an asset. Therefore, the increase in the asset is a decrease here. Then we have the increase in receivables from funds. Increase in receivable from funds. So that's the 5,400 minus the 4,050. So that's going to be, and again, it's an asset. So the asset's going up. Therefore, it's going to be represented as a negative here. And then we have increase in accounts payable. So increase in accounts payable, the 2,550 minus 1,700. This is a liability increasing, and therefore it's going to be reflected here on the statement of cash flows as a positive. And then we have the net cash used in operating activities, the credit, and the negative number, positive number, negative number, negative number, positive number. If we add those up, we get the 12,440. That 12,440, of course, matching what we have in the direct method as well.